We are looking at Strive Inc. right now, ticker symbol ASST on the NASDAQ, and the board is lighting up green with the stock currently trading at exactly 1.07 USD, showing a solid intraday push of positive 0.035 or roughly 3.33% in the green today. That might look like a standard fluctuation for a small cap stock on the surface, the kind of movement that day traders glance at and move on from. But if you scratch just a millimeter below that surface, the reality of what is happening with this company is infinitely more complex and aggressive than the price tag suggests. Most people looking at this chart see a penny stock trying to find a floor. What is actually happening is the formation of a highly leveraged, potentially explosive Bitcoin Treasury engine that is being built in plain sight, and the market is only just beginning to wake up to the mechanics of this transformation. The expectation here is that Strive Inc. is just another volatility play, a rebrand of a legacy tech company, or perhaps a political statement given its founder's history. But the reality is that we are watching a company attempt to replicate the MicroStrategy playbook, but with a twist. They are attaching an asset management arm to a Bitcoin balance sheet, essentially trying to create a compounding machine that pays you to wait. That 3.33% move today isn't just random noise. It is the sound of accumulation occurring ahead of key dividend dates for their newly issued preferred shares. And that creates a curiosity loop that every single person watching this needs to pay attention to right now. Let's strip away the noise and look at the raw mechanics of today's move, because the volume profile tells us a story that the headline price does not. We are seeing elevated buy-side pressure right at the $1.05 and $1.06 levels, acting as a hardened floor of support that retail sellers have been unable to break through all morning. When you see a stock like Strive Inc., which historically has been prone to massive volatility, suddenly start respecting technical support levels with this kind of discipline, it usually signals that institutional money or high net worth individuals are stepping in to defend the price. Why would they do that at $1.07? Because the market is forward-looking, and it is pricing in the implications of the SATA preferred stock issuance and the upcoming dividend payouts scheduled for December. This isn't just about buying a stock hoping it goes to $2. It's about positioning for a yield-bearing crypto proxy. When you compare this to the price action in Tesla stock or the recent consolidation we've seen in Nvidia stock, Strive moves with a different kind of velocity because it is untethered from traditional earnings multiples and is instead pegged to the sentiment of the digital asset market and its own aggressive balance sheet restructuring. We need to have a serious conversation about the disconnect between what the average retail investor sees on their Robinhood app and what is actually happening in the boardroom of Strive Inc. The common belief is that you buy this stock as a lottery ticket. You throw in a few $100, hope for a squeeze, and get out. That is the expectation. But let me challenge that with the contrarian reality. This company is engineering a financial structure designed to absorb Bitcoin volatility and convert it into a steady stream of dividends for preferred holders, while the common stock, the ASST ticker we are watching at 1.07 USD, acts as the leveraged bet on the success of that strategy. If you are just flipping this for pennies, you are missing the macro thesis. You have to understand that online investing has evolved. It is no longer just about buying blue chips and holding for 30 years. It is about identifying structural arbitrages in the market, and Strive is presenting one of the most fascinating risk-reward profiles we have seen in the small-cap space in 2025. Whether you use Schwab Intelligent Portfolios for a hands-off approach, or you're grinding daily on the Interactive Brokers trading platform, you have to acknowledge that the game has changed. The tools available for self-investing now allow you to access these types of hybrid equity crypto plays, but they require a level of due diligence that most people simply aren't willing to do. Let's zoom in on the intraday behavior we are seeing right now. The stock opened slightly lower, testing the resolve of the overnight holders, but immediately snapped back as volume poured in around 10 a.m. This is a classic checkmate pattern, where the weak hands are flushed out early, allowing stronger capital to absorb the float. We are seeing similar patterns across the sector, but Strive is outperforming its immediate peers today. If you look at the order flow, there is a significant amount of buying coming through smaller, fragmented orders, which often suggests retail accumulation, potentially through platforms like Fidelity Investments or the Robinhood cash management ecosystem, where younger, more aggressive investors congregate. However, there's also a layer of block trades hitting the tape indicative of family offices or smaller hedge funds taking a position. This duality, retail enthusiasm combined with smart money accumulation, is what fuels the kind of 3 to 5% steady grind upwards that we are witnessing. It's not a parabolic spike that crashes 10 minutes later, it's a measured, confident march higher. Now, to understand why this $1.07 price point matters, we have to talk about the business model, because Strive Inc. is not your typical company. This entity was born out of the merger between asset entities and the asset management operations associated with Vivek Ramaswamy's Strive vision. The core business is twofold. First, they operate an asset management arm that focuses on unapologetic capitalism, rejecting the ESG mandates that have dominated Wall Street for the last decade. This resonates with a massive demographic of investors who feel alienated by corporate politics. Second, and this is the critical part for the stock price, they have pivoted to become a Bitcoin Treasury company. This means they are using their capital, including proceeds from preferred stock offerings, to buy Bitcoin directly on the balance sheet. When you buy Apple stock, you're buying iPhones and services. When you buy Strive Inc., you're buying a claim on a pile of Bitcoin and an asset manager that is actively trying to disrupt the status quo. It's a high beta play. If Bitcoin goes up, Strive's book value explodes upwards, often with leverage. If Bitcoin crashes, the pain is amplified. But today, with the crypto markets holding steady and the broader indices looking for direction, Strive is catching a bid because investors are starting to value that Treasury strategy as a legitimate hedge against fiat inflation. This brings us to the ecosystem of how you actually trade this. If you are sitting there with your Fidelity brokerage account or looking at your Fidelity IRAs, you might be wondering if a stock like ASST fits into a long-term retirement plan. That is a valid question. Traditionally, you wouldn't put a penny stock volatility play in a nest egg, but the landscape of investment help and wealth management is shifting. We're seeing more Fidelity wealth management advisors and even users of the Fidelity mobile app starting to allocate small, satellite positions to high-growth asymmetric bets. The idea is that you have your core safety net, but you use 5 or 10% of the portfolio for aggressive plays like Strive. It's the same logic that drives people to use SoFi Invest or the SoFi Robo-Advisor for their main savings, but then use SoFi Active Investing to pick individual stocks that have the potential to double or triple. Strive fits that aggressive bucket perfectly. It is not for the faint of heart, and it certainly isn't for the money you need for rent next month. But for the capital you can afford to risk, the technical setup at $1.07 is screaming opportunity to the momentum traders. I want to pause here and get a pulse on the room, because this community is one of the smartest in the financial space. Comment below how many shares of Strive Inc. you currently hold, or if you are waiting for a dip back to the $1 level before entering. I am genuinely curious to see if the sentiment here is bullish on the Bitcoin Treasury strategy, or if you think it's too risky. Also, let me know which broker you're using. Are you seeing good execution on the Robinhood app, or are you finding better liquidity on the Interactive Brokers platform? The disparity in execution speed for these small-cap stocks can be massive depending on your provider, so drop a comment and let's compare notes. Back to the analysis. We cannot ignore the SATA component of this story. Strive recently listed its Series A preferred stock under the ticker SATA. This stock pays a variable rate dividend, and it is designed to trade around a stable value, offering a yield that is extremely attractive in the current interest rate environment. The existence of SATA is a game changer for the common stock ASST. Why? Because it proves that Strive can raise capital from the public markets effectively. They raised over $140 million, and they are using that cash to buy Bitcoin. This creates a buying pressure on the underlying asset, Bitcoin, while simultaneously validating the company's corporate structure. For the common shareholder at $1.07, this reduces the bankruptcy risk significantly. It shows that the market trusts management enough to give them 9 figures of capital. When you look at other investing sites or read the forums on investment help, you will see people confused about the relationship between ASST and SATA. Here is the simple version. SATA is the fuel. ASST is the car. The more fuel they get, the faster the car can theoretically go, assuming they don't crash.